Hey guys, what is going on? Welcome to the video. So SPACs have been taking off lately, shooting up like crazy, going over 100% in a week. So in this video, we're going to be talking about all the SPACs, my thoughts on the market as a whole, should we be taking profits, should we be putting more money in SPACs, and then also the next SPAC that I plan to be buying heavy. I've already started a decent sized position, but I do plan to buy a lot more of this position, and I do think this stock is one of the best value SPACs and has the most upside at this current price. So without further ado, we're going to talk about the SPAC market as a whole, just each SPAC, and then we're going to be talking about the new SPAC that I'm buying. So let's get into it. So first off, let's talk about LCA. Lyncadia Holdings, as we know, this is the merger with Golden Nugget Gaming. Once they came out with their merger vote date, this stock has absolutely taken off lately. Shout out to those who are the OG subscribers who know how much I like this stock in the past. I'm holding very strong in this one. I do plan to hold up until the merger. Maybe hold a small position through the merger, but I do plan on taking profits mostly right before the merger because any of these stocks could turn to a sell in the new situation. Next up, HCAC. As we know, this is the merger with Canoe. This has been one of my favorite EV stocks for a long time now. I've been talking about just how underappreciated this stock was, and take a look at the stock price now. It was trading for $13.45 at market close on Friday. Right now, it's sitting at $17. Up 26% after hours after they announced the merger vote date. So huge move for this stock. Shout out to those who are still holding on strong. SBE, another one that has taken off over $30 now. CIIC getting close to that $30 range. LGVW, this is also another great SPAC that I like a lot. Almost sitting at $16 now. OPES, another one that announced their merger vote date. Now sitting right around $16. I do think this one has more room to run. Like this a lot. Have been increasing my position. PIC right now sitting at $16. I could see this running up to $20 or so pre-merger. DMYT, this is another one that I do expect to run up $20 plus when the merger vote date does come out. Some great fundamentals for that company. So right now I'm still holding my main position for these SPACs. I have taken some small profits along the way. But one thing we have to realize, this is not normal. This market is not normal at all. Anything can happen with these SPACs. They are very speculative investments. So I do highly recommend that you do take some profits along the way. You got to lock in some of those gains because anything can happen for these companies. And the market's not normal. It's not normal for warrants to go 300% up in a week. Some of these moves that these SPACs are making are just crazy. And could it be a SPAC bubble? That is a possibility. But I do think that just that hype sector as a whole will run these even more. Just because SPACs are so hot right now, who knows how long they'll stay hot? Who knows how long the market will stay flooding money into these SPACs? Like we saw earlier in the year, there was a SPAC crash after the big bubble that we saw. So stay grounded, stay with your strategy. Don't let these stocks get overvalued on you and you forget to take profits and then they shoot downwards. You don't want that to happen. So just be smart with these investments. Don't get a big head. Just make sure to stay grounded and take some profits along the way. You can never go wrong taking profits. And whenever these companies merge, they could either take off some more or they could have to sell the new situation and dump. So my personal strategy is taking main profits before the merger does happen and then writing out maybe a small amount of shares through the merger and just seeing what happens, writing it out for the upside. Alright, so now let's get into the next SPAC that I've been buying very heavy and is one of my favorite values right now. So this stock is jikh, jikh Capital 2, and this can be the merger with Uphealth, which we'll talk about the business in a second. First of all, as we know, SPACs pretty much have a floor before they merge of $10. This stock is right now right under $11 after hours. It did have a lot of recognition post-market. So right now it's trading at $10.85, judging by the aftermarket move of this company. But just the downside, worst case scenario, it has a downside of 85 cents pre-merger, but I think this has $15 plus upside leading up to the merger when the date does come out and everything like that. So what does this company do? So first of all, jikh Capital has entered into a business combination agreement with Uphealth and Cloudbreak to form a combined company to list on the NYSE, creating a unified and profitable global digital health company. So for those who know the Teladoc business model, this is kind of like Teladoc. In my personal opinion, digital healthcare is the future of healthcare, no doubt about that. And as we know, some of the big funds like ARK Invest, which is known for predicting the future of a lot of these growing industries, they have Teladoc as 4% of their portfolio. So what does this mean? They pretty much agree that digital health is the future, and I just believe there's so much growth left in digital health. There's not going to be one or two players in digital health. There's going to be a lot of players, and Uphealth is going to be one of these main players, in my personal opinion, in the future. And just leading up to the merger, the SPACs should be getting more recognition, and the industry as a whole has just been taking off. So I see a great opportunity in jikh. So first off, what does this company do? So they have 4 capabilities at the center of population health management and telehealth. So they have the integrated care management platform, so population health solutions for patients with complex medical, behavioral health, and social needs, and this is just going to be pure digital. global telehealth, digitally enabling the continuum of healthcare with award-winning digital primary care and specialty consultations. They have their digital pharmacy, kind of like Good RX for those who know that business model. Amazon has also entered the space. So a full-service e-pharmacy delivering compounded and manufactured medications. So just delivering these medications to your door, that's what the digital pharmacy will be, and just giving you these medicines online. And then behavioral health, which is tech-enabled services rapidly digitalizing mental health and substance abuse. So some of the end markets that they serve is health systems / medical groups, health plans, government ministries, employer health, and education. So we can take a look at the right side of this slide. They have 2020 estimated revenue, $115 million, their EBITDA margin, 12%. Their expected 2021 estimated revenue is $194 million. Their EBITDA margin in 2021 is also expected to be 12%. And the U.S. healthcare venues served by domestic telehealth is 1,800 plus. And we can see at the bottom where it says state RX licenses. It did cut off when I took the screenshot, but it does have 50 state licenses. So in their investor presentation, they give these problems: aging population, rising chronic illness burden, healthcare cost escalation, inequitable access, and the impact of COVID. And on the right side, they give their solutions, what they're going to do as a business. And then also, COVID has accelerated 10 years of digital health progress in 3 months, which I fully agree with this thesis. So having COVID in this current environment, this has led a lot of people not to go to doctor's offices and do everything over telehealth and e-health just from their house and have their doctor's appointments from there, because they don't want to go to the doctor's office and get this disease. And most people, even when the world gets back to normal, the vaccine comes through and everything is fine, I do think that telehealth and e-health will still be the main player over regular doctor's offices. In my personal opinion, I do think this is 100% the future of health. So as long as the merger does happen, Uphealth plans to trade under the ticker symbol of UPH. And as we can see in this chart, they're in pretty much every market in the telehealth sector. So they have the global telehealth, they have the integrated care management, they have the US drug prescription market, which is obviously going to be online, and they have the behavioral health. And this company is just going to be at the center of everything, probably having a smaller market share than any of these bigger companies, but they are diversified within this sector, just giving them that more growth opportunity. And as you can see right here, they do give an overview of how they expect this revenue to pan out between these 4 sectors that they're going to be in. And then their expected revenue from right now of 2020 estimated all the way to 2022, and just their estimated growth within each of these sectors. As you can see, that telehealth will be the biggest one, and then digital pharmacy, these are their 2 big ones. Integrated care management, behavioral health, these are going to be 2 smaller revenue drivers, but they are going to be there nonetheless, and there's less competition in those sectors. So I do believe that this company can grow within that sector. So we can take a look at their geographic footprint, where their current operations are. There's a very small amount, but where they expect their contracts under discussion to pan out, and just what markets they're going to be in. Hello Life and Litmus are the big brands that they're going to be in, and they also have received some awards: Indian Telemedicine Customer Value Leadership Award of 2020, Public Appreciation Award 2020, and Social Entrepreneur of the Year of 2020 as well. So taking a look at their digital pharmacy business, we can see what they plan to do. This can be a full-service retail pharmacy licensed in all 50 states, delivery of compounded and manufactured prescriptions, operates a 40,000 square foot facility with the ability to expand another 40,000 square feet at the exact same location, eMed+ system certified by the DEA and EPCS, directly integrated with SureScripts, and also testing services with LabCorp and Quest Diagnostics. So the platforms and value that they plan to serve: patients, providers, payers, and pharma. And also, this is not a beginning stage company. This is an established company that is already currently utilized globally in the continuum of care and touch over 1,800 care venues in the US and beyond, with the sections being academic, so these colleges, specialty, community, and then payer, government, and other, working with other bigger businesses and having contracts under them. And then here's some of my favorite slides for the presentation. So first of all, we can take a look, financial benchmarking to peers. We can see that a lot of these companies do trade for a premium. And then Uphealth is expected to have the second most revenue growth in 2021 of 69.3%, and then also way above the industry average in EBITDA margin, and this will be 12.4%. And then taking a look at the valuation benchmarking to peers, we can see the discount that this valuation is trading for compared to their peers. And like I was saying, a lot of these companies do trade for a premium because a lot of people do think that telehealth is the future of healthcare. And taking a look at these companies when they IPO'd and then the valuation they're trading for now, there's an absolutely huge jump in valuation from when they IPO'd to now, which Uphealth could definitely follow this scenario. They state that it has enormous near-term potential to trade up. Once again, just getting to that high valuation these other telehealth companies are valued at just because of the sector that they're in and the sector trading for the premium. So overall, do I expect this company to become the next Teladoc? Of course not, but what I can see this company being is competing within each of these categories within the telehealth sector, diversifying, becoming a worldwide business as they state in the presentation, and overall just in the growing sector of telehealth, which is the future of healthcare, in the hot sector right now, which is SPACs, and just the valuation of the stock, which is trading for under $11 with the absolute floor pre-merger, worst case scenario being $10. Best case scenario, I could see the stock being $15 plus leading up to the merger. So I see great risk reward with the stock with very little risk, very, very solid reward, 50 to 100% plus upside, and just being one of the unrealized, unhyped SPACs yet, which there's a very high probability that this stock will get realized, this stock will get hyped up and run up to the merger, as we see with these other SPACs such as HCAC, LCA, CIIC, and just all these other companies that have been getting a ton of hype lately because they are SPACs and in the hot sector, which is EV sector, but telehealth is also a pretty hot sector in the market right now. So let me know in the comments below if you're taking profits on your SPAC positions, if you're letting them ride out, what you expect from the SPAC market as a whole moving forward. Now at some point I do expect a pretty good sized pullback in a lot of the SPACs, but for now we've got to ride out for the upside as it does look to continue as there's just more and more hype behind so many of these companies. Even if they are highly valued, the hype will continue, and just SPACs trade for a premium right now, and we do have to ride with the hot sector with the market. So guys, thanks for watching. If you want to get 4 free stocks on Webull, I highly recommend you get that right now because that offer will end within the next couple days. So 4 free stocks on Webull, that affiliate link is down below. If you want to get $5 free in Acorn investing, $10 free in Bitcoin on Coinbase, those links are down below as well. I would greatly appreciate that. That would help support the channel. Subscribe, like the video if you haven't already. That helps me out a ton. And thanks for watching, guys. Good luck to everybody this coming week. I do expect to have my top 3 stocks video for December of 2020. That should be out on Monday, so get ready for that. And also my top 3 stocks for the week ahead, which will be out tomorrow. So thanks for watching, guys. Congrats for raking in those gains, for holding these SPACs, being patient with them. Patience does pay. So thanks for watching, guys, and let's get rich.